The conference is now being recorded.
Good day, ladies and gentlemen. Welcome to KPN's third quarter 2018 earnings conference call. At this time, all participants are in listen-only mode. We will be facilitating a question and answer session towards the end of today's prepared remarks, at which time, if you would like to ask a question, you may do so by pressing *1 on your telephone. If at any time during the call you require audio assistance, feel free to press *0 and the conference coordinator will be happy to assist you. Please note that this calling is being recorded. I would now like to turn the call over to your host for today's conference, Bisera Grubisic, Head of Investor Relations. Go ahead, please.
Thank you. Good afternoon, everyone. Welcome to KPN's third quarter results presentation. Before turning to the core of the presentation, I would like to draw your attention to the safe harbor statement on page 2 of the slides that also applies to any statements made during this presentation. In particular, today's presentation may include forward-looking statements, including the company's expectations with respect to its outlook, which were also included in the press release published this morning. All such statements are subject to the safe harbor statement. I would now like to hand over to our CEO, Máximo Ibarra.
Thank you very much, Bisera, and welcome everyone. I'm here with Jan Kees, our CFO, to take you through a short presentation covering our third quarter results. Let me start by sharing with you the 3 main takeaways from the past quarter. First of all, we have record high customer satisfaction scores, both in the consumer and the business segment. Second, in both segments, we see ongoing strong results from our successful focus on value and convergence. And third, our third quarter EBITDA was flat when correcting for the impact of the collective labor agreement. Jan Kees will come back to this later. Over the third quarter, the Dutch mobile market remained quite competitive, like in the past quarters. This was especially visible in the no-frills and prepaid segments of the mobile-only market. The lower mobile termination rates were introduced on the 12th of July last year, so the start of Q3 was still impacted by regulation. If you exclude that effect, mobile service revenues declined 2.5% year-on-year. This is an improvement versus the second quarter. And excluding regulation, our postpaid ARPU was flat compared to last year. This was driven by the increasing share of our KPN brand as part of total service revenues. And it's evidence that our focus on the high-value KPN brand is paying off. We also see continued strong results of our successful focus on conversions. We added 53,000 postpaid customers to our fixed mobile customer base, surpassing the landmark of 2 million converged postpaid customers. Also, when we look at our residential customer base, we see solid additions to our fixed mobile propositions. Generally, converged customers are more satisfied and more loyal. Therefore, they contribute positively to our NPS and have a higher average customer lifetime value. Our strong household proposition led to continued revenue growth in consumer residential. The declining base of Digi10 and legacy services, such as traditional voice, is offset by an increasing ARPU per household. But now let's move into the B2B business. After a quarter of revenue growth in Q2, revenues in business declined again in the third quarter. We already flagged this during our second quarter results. Moreover, at 1.7% and minus 1.7% for the first 9 months, the trend still shows a market improvement compared to the same figure year-to-date 2017. Let's take a closer look at some of the revenue buckets. While IoT is a segment positioned for growth, our revenues here declined 10% year-on-year. This is mainly due to one-off contract adjustments with some of our larger customers. However, we expect usage at these customers to significantly go up in the future, and therefore we believe it is only a temporary effect. Our proposition for IoT remains successful, evidenced by continued strong end-to-end based growth, we added 1.1 million SIM cards over the past 12 months, and we continue to attract new customers to our fully integrated KPN Things platform. And we see solid growth in professional services driven by increased order intake in previous quarters. We have recorded a first-time positive Net Promoter Score for business, and I'm proud that the hard work we have put into turning this segment around is now recognized by our customers. They value our simplified and standardized product portfolio. And having added 37,000 customers, we see continued solid demand for our integrated KPN One product for small medium enterprise. Let me now hand over to Jan Kees to take you through the financials.
Thank you, Maximo, and good afternoon, everyone. As Maximo indicated, the impact from regulation in the third quarter was limited to only the first part of July. The effect on total revenues was approximately 4 million euros. And when excluding this, adjusted revenues declined 1.3% year-on-year. Adjusted revenues in consumer declined 0.6% year-on-year, fully driven by the effect of lower termination rates and a lower base of mobile-only customers. Business revenues continued to witness some tailwind from last year's acquisitions, and this effect will phase out towards the end of the year. But where business revenues also benefited from additionally low-margin hardware revenues in the second quarter, these were not material in Q3. Wholesale revenues were mostly impacted by lower revenues from international fixed voice and by lower fixed and mobile termination rates. This was partly offset by higher mobile service revenues due to a larger mobile customer base. As the negative effects lapsed in Q3, we are confident wholesale revenues will stabilize around the current level. At the start of July, we agreed on a new collective labor agreement for our employees. This means we provided a wage increase with retrospect as of 1st of January 2018, and we recorded the full 10 million euros impact for the first 9 months in our Q3 personnel expenses. But please note, roughly 7 million relates to the first half of the year. Excluding this effect of 7 million, third quarter adjusted EBITDA would have been flat year-on-year, and our margin would have increased by 60 basis points compared to last year. Regardless of the collective labor agreement, we saw an increase in personnel expenses during Q3. This is mainly driven by insourcing of network software engineers that were located abroad and previously recorded in IT TI expenses. Now let's turn to free cash flow. Over the first 9 months, free cash flow grew almost 70 million euro compared to last year. Growth was mainly driven by less cash interest paid, less impact from change in working capital, and higher EBITDA. Net debt was somewhat higher than at the end of the second quarter. The main reasons: the redemption of the 1.1 billion euro hybrid bond in September, the payment of an interim dividend of 0.04 per share totaling 168 million euros, and the final coupon payment for the euro hybrid of 67 million. Through the redemption, we will save the coupon payment as of next year, resulting in real cash savings of 67 million euro in 2019. Then let me now move to the outlook for 2018 and some concluding remarks. Full year adjusted EBITDA will be in line with last year. CapEx is expected to be around 1.1 billion euros, and we update our free cash flow outlook to approximately 800 million. And we also confirm our guidance for the full year regular dividend of 0.12 per share, which represents an increase of 9% year-on-year. So to summarize, our customer-centric approach is delivering results, leading to record high customer satisfaction scores in both consumer segment and the business segment. Our focus on value and convergence is delivering growth in our fixed mobile customer base and our KPN One base. And our third quarter EBITDA was flat, when correcting for the impact of the collective labor agreement. Thank you all. We will now take your questions, and we would like to keep today's call about the current trading update. So please save any questions related to our strategic update for the Capital Markets Day. Thank you.
Yes, we are ready to start with the Q&A. Please limit your questions to 2 each, and in case there is still some time at the end, you can always request for more questions later in the call. Operator, you can start with the Q&A.
Of course, ma'am. Ladies and gentlemen, as said, we will start the question and answer session now. If you would like to ask a question, you may do so by pressing *1 on your telephone. So *1 for your question or remark. Go ahead, please. The first question comes from Mr. Polo Tang. Go ahead, please.
Yeah, hi. I just have 2 questions. The first question is really just about the new cable wholesale regulation. What's your take on the impact on the market and KPN specifically? And my second question is really just about price rises that you've put through in terms of fixed line. Why are you not seeing stronger growth in terms of consumer residential revenues? So can you remind us of the quantum of the price rise that you put through? If you maybe just talk about what some of the drag factors might be that could be upsetting the impact of the price rises. Thanks.
Yeah, thanks very much for your questions. You know, then on the cable, we have already had over the past quite solid contracts, wholesale contracts with our main customers, Tele2 and T-Mobile. These are long-term contracts, are very convenient for our customers, so we don't see in general any short-term, medium-term material impact. Then you know very well that in the next periods, Ziggo has to come back to us with a pricing to the market, with a pricing on the wholesale on the cable. But we also know that no one is absolutely like agreeing with this decision, including Vodafone-Ziggo. And again, we don't see an impact in the short, medium term, material impact. We will understand better in the next periods. Of course, we are modeling all the different scenarios or the different impacts that we could have. But for the moment, we don't see any material impact.
Yeah, and Paulo, as to your question about revenue in residential, actually in the Q3 we saw fixed revenues increase by 0.4% year on year, driven by a higher ARPU per household. But the price effect in itself was higher, but that's partly offset by a somewhat lower broadband base, but also because in residential still we account for legacy products, and we see also continuing decline of somewhat legacy base, such as the older Digitenne television and traditional voice, PSTN, which is part of the net effect. Also somewhat lower non-service revenue is recorded for. So as a net result, still an increase, but indeed somewhat higher than the ARPU on broadband would suggest.
Okay, thanks.
The next question comes from Mr. Kpn Q3, Deutsche Bank. Go ahead, please.
One on personnel expenses. On B2B, obviously last quarter you had higher hardware revenues and some of the M&A impacts are washing out. Could you give us a sense of how just the underlying trend compared to last quarter? Is it stable or have things gotten better at all? And can you remind us of how we should expect trends to develop next quarter, given, I guess, some of the larger impacts from Q sites also start to wash out? And then just when we look at personal expenses, those are up 2% year on year. I think, in case you mentioned there has been some impact from the IT insourcing. Does it explain the full increase that we've seen in personal expenses year to date? Thank you.
Yeah, on the B2B, the revenues were 3% lower, and this 3% is mainly coming from rationalization and migration from traditional services to the new technologies and integrated solutions. It's clear there is price pressure in a very competitive mobile-only market that is specific for the LE and mainly LE and corporate segments. Then we also had revenues from Internet of Things platform, KPN's Internet of Things proposition that is declining 10% year on year. And that was, as I already mentioned, coming because of contract adjustment with some largest customers we had. And this has been partly offset by growth in professional services, growth on IT services, particularly security services and cloud solutions. Then you also have to note that in the B2B, it's better never to take one single quarter, in order to determine the real trend, because revenues in B2B depends on many factors. These are the factors I already mentioned, but there are also factors that in the Q2, and we flagged that in our previous call, there were some revenues or more revenues coming from hardware sales that we are not having in this Q3. And if we look at the underlying trend and the long-term trajectory, that is still a positive long-term trajectory. But of course we can and we have to do better in the B2B in general. And more details will be, of course, shared with all of you in the next Capital Markets Day.
And Keval, as to your question about the personnel expenses, actually there are three elements to take into account. First of all, the already mentioned CLA, of course, is there for the full 9 months recorded in this quarter, 10 million in total, of which 7 million is more related to the first half of the year. Then, of course, M&A does not only have a tailwind on our revenues, but it also means that you buy people as well. And also that increased somewhat the personnel expenses, of course, because it increases at that point somewhat the headcount. And yes, thirdly, extra, there's also a substantial part, is the IT insourcing. Quite a substantial amount of people on the maintenance of the network and the monitoring of the network that we have been insourcing. Until now, it was recorded for in IT TI expenses. So that's just moving an OPEX line from one line to another line. And all your other two also are well explained by this. So underlying, we still see a decreasing trend. So we're confident that we will continue to reduce indirect OPEX, including personnel expenses.
That's clear. Thank you.
The next question comes from Mr. Sam McHugh, Exxon. Go ahead, please.
Yeah, good afternoon, guys. Just a couple of quick questions on B2B. So firstly, on the migrations of customers away from consumer into B2B, can you roughly say how long you think that will last? You know, you're saying maybe 6,000-8,000 every quarter move across, and how long that could go on for. And then secondly, on the Net Promoter Scores, obviously it's great to have it in positive territory now. And what do you think is really the root cause of the improvement? Is it the KPN One plan itself? Is it the extra services? And, you know, how can you improve this even more? Thanks.
Yeah, on the first question, we have already migrated quite a good chunk of our customers into the KPN One platform. But if I'm not wrong, we're approximately around 30% plus of our customer base that have been migrated. We also have made some progresses in the third quarter. Our plan is to accelerate this migration because we need to get rid of the legacy platforms and make sure that we can get most of our customer base in the new platforms with better cost to serve to cost and of course more efficiency. Of course, on this migration, it will take some more time, but we are in this moment deciding how this can be accelerated in order just to complete the migration in the shortest time period. On the NPS, it depends on many reasons. I think is in general the quality of the service that we provide to all segments, but of course that is also depending quite a lot in the migration to new platforms where the experience changes completely and is absolutely much better. That is definitely one of the main reasons for this NPS increase. In general, I'm quite happy about this performance of the NPLs because it means that all our efforts are getting into the right direction. B2B is a complex environment because it's made by different segments, but in general, all the underlying trajectories are getting into the right direction. Then again, in a few weeks from now, we will have the chance to share much more on that with all of you, and we can have discussions on the way we are monitoring our operational performance.
The next question comes from Mr. Frederic Boulan, Bank of America. Go ahead, please.
Good afternoon. So just to come back on the business side, so I think the pitch from March 2016 on the business area was trying to stabilize the telco legacy business, but also grow pretty aggressively in the IT side. So you're showing some pretty good growth in your IT services and professional services. Can you tell us a bit more which areas have you tackled successfully in your view? I mean, IoT seems to be still a very limited piece of the business, and resource in the legacy businesses, we continue to see some pressure. For instance, broadband and network is down quite a lot again. So which areas you think still have work to do, and where we could see some stabilization in the trend? So any granularity here would be welcome. Thank you.
Yeah, I think that when it comes to the IT, we still see good potential in the security services. We are now in the process of making sure that all the recent acquisitions that we have made can be fully integrated, and that those security services can be fully integrated in our value chain. So Salesforce for the different segments can start really making sure that in our telco product portfolio, also IT security services are well embedded. So I see potential there. Of course, on the IoT is, again, another long-term trajectory. We are quite happy about the performance in terms of volumes. This is a volume-driven business. Then, of course, from time to time, there will be some contract adjustments. But in the medium long term, we see that, I mean, the end result of the multiplication volumes and the ARPU from contracts will have a positive development. On professional services, okay, that is just a confirmation. Things are getting away into the right direction. There are other services like workspace and cloud. These are part of our core IT product portfolio. But the main opportunity that we have is that, as you know, our market share in the B2B segment is very high. So we have the opportunity of leverage all the customers we have in the different segments with the right IT product portfolio, making sure that all the new acquisitions will deliver the right products to our mainstream product portfolio. So that is exactly our ambition. And I think that we are getting there, but we are just only the beginning.
Okay, thank you.
The next question comes from Mr. Usman Ghazi, Berenberg. Go ahead, please.
Hello, gentlemen. I've got two questions, please. The first one was just on consumer residential. Again, I mean, I think there was an acquisition that we're annualizing in Q3, right? So could you indicate what the what the shortfall from that annualization was in Q3, please? And then just on the enterprise market, I think you mentioned that 30% of customers had been migrated to KPN 1, and then you wanted to accelerate it. I mean, is it fair to say that the largest part of the repricing risk and those customers with the highest migration costs, those have already been tackled, or is that not correct? Thank you.
Yeah, let me start with your second question on the B2B. Yes. I mean, I confirm this. More than 30% of the customers of the small medium enterprises have been migrated. We are addressing the large enterprise base as well. It's of course, as I said, a process where there is a rationalization of your portfolio. I mean, if you have several lines. Some of these lines are legacy lines, and then you move into the new platform. Then you know very well that the first impact is that as the result of that rationalization, you have like a lower value of the full and total contract. But immediately after, if you get the customer on the platform, you will be able to upsell that customer much easier, and at the same time, the cost to serve is going to be extremely low compared to the current one. So it's just the value tactic deterioration because of this migration. I think that we can accelerate more this migration. My ambition and our ambition is to do that. And we are now analyzing what are the different ways in order to get there as soon as possible. But the more we have customers on the platform, the better it will be for all our results, in particular when it comes to upselling. Because then, the platform will give customers the opportunity to upsell and cross-sell real time, which is a unique opportunity that we have never had.
Yeah, and as to the small acquisition, that's Solcon. It's a very special niche player targeting religious segment. We didn't disclose the revenue. It's some tailwind, a small tailwind. I can tell you in Q3 2017 it was 47,000 broadband customers, because that's what we disclose. But with a smaller TV base than regularly would be expected, given the special character of this group. So less triple P in this segment. But 47,000 broadband customers we acquired, and it's a small tailwind.
Thank you.
The next question comes from Mr. Luigi Minerva, HSBC. Go ahead, please.
Yes, good afternoon. Two questions, one on Spectrum and the second on B2B again. On Spectrum, I was wondering if you have any indication of the approach that the Spectrum Agency is likely to take on the auction, whether they want to create symmetrical blocks or ring-fence portion of the spectrum, or maybe more broadly, whether you believe they will in the trade-off between maximizing proceeds from the auction and leaving actually the operators instead more funds to deploy the network, whether which one they will prioritize of the two. And secondly, on B2B, just to clarify, if we adjust for all the M&A and the one-offs in Q2, can we still talk about a sequential improvement of the underlying adjusted revenue trends Q3 over Q2? Thanks.
Yeah, on the spectrum, of course, we don't know any detail of the auction yet, so that's why we cannot speculate on that. We are modeling different scenarios, as you can imagine, but we don't know the details yet. The only information that we currently have, that again is not final, but is what we can consider as quite a reliable information, is that we will have an auction for the 700, most likely at the beginning of 2020, and we will have the auction for the 3.5 around 2022. So we don't have the final date yet, but we only know that this auction is going to be split.
Yeah, and as to B2B, a bit more forward-looking, of course, we will also include that in the update that we give in the Capital Markets Day. What I already can say is that we still see some volatility from quarter to quarter, as we already always indicated. But we are very confident that we will be able to deliver sustainable margin improvement. And that's certainly also what we see happening, yes. So underlyingly, we see NPS, Net Promoter Score, is improving. As already said today, record high, first time positive in B2B. We saw also new products, our target portfolio doing very well, also compared to competition. But it's too early to indicate too much on revenue stabilization. Of course, we will give a somewhat longer outlook on the Capital Markets Day, but we are confident that we are able to deliver sustainable margin improvement in B2B also.
Okay, thank you very much.
The next question comes from Mr. Josh Mills, Goldman Sachs. Go ahead, please.
Hi there. Thanks for taking the question. I have two, please. And the first is just to follow up again on that B2B point. But if I look back at Q2, when you reported slightly positive revenue growth, I think you indicated at the time that there was a 2 to 3 percentage point boost, and therefore the underlying service revenue growth was more like -2%. The report in Q3 of -3% will also be including some M&A from Qsite. So is it not the case that the B2B revenue declines are kind of mid-single digit and therefore slightly worse than Q2? And it may be that the margin in the NPS score has improved, but top line hasn't. Just really want to make sure I understand that correctly. And then secondly, just on the mobile service revenue trends, you've seen an improvement quarter on quarter. Wanted to know whether that was to do with a improving competitive environment, and particularly whether you've seen a more rational price approach from MVNO players like Simple. Thanks very much.
So I will take the first question. Again, on B2B, we see different things happening. The 2 to 3% was relating M&A, which the tailwind is also there in Q3, yes. But we also said about Q2, there was some hardware revenues initially also, and actually in Q3, where we have seen them also last year. In this Q3, they were not. So there's always some seasonality in that. So it's very difficult to compare on a real quarter-to-quarter basis revenues in business. That's why we look at more the longer-term trends. And then, yes, competition is still there, of course. Some tailwinds that will phase out in Q4, especially the 1st of December in Q4. But underlyingly, giving the positive net promoter scores, giving the positive uptake of the new target portfolio, indirect cost reductions that are ongoing we do see gradual margin improvements also. So there's some seasonality fluctuating to that, but enough support to be confident about delivering sustainable margin improvement in B2B also.
Yeah, on consumer mobile service revenues, I think that there are two key messages. The first message is that our postpaid ARPU is remaining stable, even though we operate in a very competitive environment. But we see the price pressure is mainly on mobile only and affecting our no-frills and prepaid segments. So we are good, and we have been doing well in shifting as much as possible the value to the KPN brand. So that's why the KPN brand now has more share in the service revenue mix. And the second information is that as our main focus remain convergence and retention of high-value KPN customers, that is what we have been doing, and by the way, we have been achieving. If you take the KPN brand postpaid base, we have reached 68% penetration. In the Q3 2017, it was 62%. So moving from 62% to 68% into convergent proposition of the KPN mobile postpaid base is something that we are quite proud about.
The next question comes from Mr. Emmanuel Carlier. Kempen, go ahead, please.
Yes, hi, good afternoon. Two questions from my side. One is on the subscriber additions. So since a couple of quarters, it's somewhat weaker. Could you explain in a bit more detail the drivers for that? So is that unbundling in combination with somewhat increased competition? And how do you expect that to evolve? What could result in better KPIs in the coming quarters? And then the second question is on the CapEx. So I think you benefit from deregulation on the fixed side. I would like to know what the impact would be on your CapEx budget. Thank you.
Yeah, on the customer base in the consumer segment, if we take the broadband, there is still negative net adds, but the underlying trend is improving. If you know that in the postpaid broadband base, we have also the clan cyclic, which is the complete offer for the SOHO segment, and that is positively jeopardizing part of the customer base of consumer residential. So that is, I mean, a positive news because we get a better ARPU and a lower churn rate when we move customers from the residential consumer into the SOHO residential customer base. But net of that, the number is better than in the previous quarters. So the underlying trend is quite positive. And we believe that also looking at the numbers of September, that underlying trend will be even better.
Is that not a seasonal impact?
I don't see a seasonal impact in this moment. So it's more structural performance.
And then as to the CapEx question, relating to deregulation on the fixed, are you referring to the deregulation specifically for business parks?
Yes.
Oh yeah, okay, yeah. Then I understand your question. So yes, in business parks we have become deregulated, and as a consequence of that, we have indicated to roll out more fiber, but also VDSL upgrades to business parks. And these speed increases also allow for a lot of value because they allow migration of existing customers to KPN 1, whereas now they have connections that will not be able to be upgraded to KPN 1. And it's also an opportunity to strengthen our competitive position, both for delivering fiber or VDSL upgraded speeds to our customers on business park, but also, of course, to delivering KPN 1. But all this we do within the CapEx envelope that we have. So it's not an extra on top of the CapEx envelope. It's a reallocation that we have done within our current CapEx envelope. So as a result of that, we do not see an increase of our CapEx.
Yeah, but and on top of that, I think you have to upgrade your network less, your legacy network. So that should result in some CapEx savings as well, no?
Okay, so that's the most recent deregulation that we can migrate faster to away from legacy. Indeed, that will help us especially also cost savings, it will help us. Some maintenance CapEx, but it will also have CapEx involved to do the modernization, of course. But as a net result, especially bottom line, will be affected by a increase of margin in EBITDA because it's our OpEx on those older infrastructures are much higher than our fiber new modernized networks that we can roll out now a bit faster. So it will have the next few years a positive impact on our margin profile, more probably than a CapEx influence.
And is that something you can quantify?
No, not at this moment certainly, and it will be also part of a much bigger move towards modernization, SDN, software-defined networking, network functionality virtualization, NFV, network functions virtualization, NFV, and moving towards an all-IP infrastructure. Ultimately, that will bring us in very substantial savings, very substantial savings, but that certainly is something that we want to touch upon on the Capital Markets Day at 28th of November.
Okay, thank you.
The next question comes from Mr. Mandeep Singh, Redburn. Go ahead, please.
Hi, thank you. So the question is really around the mobile competitive environment and the pending approval or not of the merger deal. Have you noticed any behavioral change competitively from T-Mobile or Tele2 in the run-up to the decision? That's the first part of the question. And the second part of the question is, what do you think the outlook would be if the deal is approved or if the deal is blocked? How do you think it could play out? Thank you.
Yeah, of course we cannot speculate on the final outcome of the merge between T-Mobile and Tele2. On your first question, we don't see any change or any like a different behavior of these two players in the Dutch market. I mean, before any decision coming from the European Commission.
Sorry, could I just follow up, because I think you misunderstood my question.
Yeah.
What I was trying to say was, if the deal is blocked, how do you think the operators might behave competitively if the deal is approved? How do you think the market dynamics will play out? Not whether you think it will be approved or blocked.
No, but it's exactly my answer was the right answer, because I understood perfectly your question. But we cannot speculate on the result and outcome of the European Commission decision.
Okay, thank you.
The next question comes from Mr. Paul Sidney, Credit Suisse. Go ahead, please.
Yeah, I just had one follow-up question, please, on regulation. In February, KPN extended and expanded the wholesale agreement proposal to your service providers. I was just wondering if we could get an update on where we are and what's been the feedback from the service providers themselves, and also what has been the response from the ACM.
Yeah, you know well that I mean, if you ask the most important actors if they are fine with this regulation, as you already mentioned earlier, there is not, let me say, like a general consensus on this regulation of cable, because we don't need cable regulation. And we don't need cable regulation because we have been already operating in a kind of open access, with a kind of open access approach. We signed in 2015 with T-Mobile and Tele2 two very important wholesale contracts. They have 7 years duration, and they are very well articulated. So this is the first point. The second point is that when you move from one technology to another technology, in this case from KPN infrastructure to cable infrastructure, then you need to go towards some additional investments, because changing technology, changing access, that will be also quite demanding. So the combination of these two factors are quite important, and that's why we believe that in the short, medium term, there is not going to be any material impact on cable regulation.
But in general, has the extended proposal been taken well by the service providers?
No, we of course cannot give any detail on that.
Okay, thank you very much.
The last question comes from Mr. Paul Sidney, Credit Suisse. Go ahead, please. Your line is open. Go ahead, please.
Did you try to call me up?
Mr. Ulrich Rata?
Oh, hello. Sorry, you called up Paul Sidney. I have two questions, please. The first one would be on cost. The incremental cost savings, if I understand the disclosure correctly, this quarter was 15 million compared to, I think, 25 last quarter and 45 in the first quarter. I'm not entirely sure. That's just from memory here. So is this 15 million just sort of the ups and downs as these projects sort of come to fruition, or is this slowdown really something we should be thinking about? And my second question is the IoT contract adjustment. Could you describe a bit more what exactly this means, a contract adjustment that sort of drives the revenues into a decline? In particular, against the background that at some point, I think during your commentary, during the Q&A earlier, you said that in IoT you sort of have to accept contract adjustments from time to time, if I understood that correctly. Could you just describe what these contract adjustments are, how they happen, how often they happen, and sort of give a bit of background on that? Thank you.
Yeah, to start with the first question about the simplification savings, as you were actually absolutely right. It's 190 million euro now run rate savings at the end of Q3. That always has some seasonality in that because we can only account for the simplification savings when and insofar the audit department recognizes the decommissioning of the derelated IT systems, and that comes in waves and in blocks. But we remain on track to deliver on our target of at least 350 million euro savings by the end of 2019. Next few quarters will certainly be, some of the quarters have to be higher than this quarter in order to deliver that, of course.
Yeah, on your second question about the IoTs, let me give you a little bit more of color. It's not just one contract, it's just some contracts. When they come to a renewal, that is more about the ARPU, and those contracts had a quite high ARPU compared to other contracts. So now they're getting to like an average ARPU IoT contract. Again, it's renewals, is a number of contracts, and the driver is ARPU reduction. But in general, the most important thing is that we will see quite a material, huge increase in the volumes of these 1.1 million additional SIM cards on IoT platform over the last 12 months.
Right. So sorry, just to be perfectly clear on this, what happened in the third quarter now is not a one-off. It's a step change. It's a reset to a new base. So you know, if everything else equal, we would see a similar trend also in the fourth quarter in IoT. I mean, of course, I understand there's an underlying volume increase as well, but this is not a one-off that you booked out revenues that you had recognized before, but it's a reset of a running contract. Do I understand this correctly?
Yeah, of course, when you have a drop because there is in the renewal a decrease in ARPU for some contracts, then you will see, thanks to the additional volumes that we also have in other contracts that we will get, like an average general increase. So not like one step down and we will be on that step down. It will depend also on the number of contracts and the volumes that we will generate. And the new volumes that we have generated, of course, will generate revenues. So it's, of course, a correction only for the quarter.
Thank you very much.
Thank you, everyone, for joining us in today's call. If you have any further questions, please contact our investor relations department. Have a good day, everybody.
Ladies and gentlemen, this concludes today's presentation. Thank you for participating. You may now disconnect your line. Have a nice day.